and this is when we welcome you to the big story of the morning. Now, let me tell you, Standard & Poor's upgraded Jamaica's long-term foreign and local currency sovereign credit ratings from BB minus to BB with a positive outlook. This upgrade reflects S&P's confidence in Jamaica's fiscal discipline, debt reduction, and economic growth prospects. This morning, to help us to understand what that rating really means for us as a country, we're joined by Mr. David Wan. He is a financial expert. Good morning and welcome, David.
Good morning, Richie B, and to your listeners.
Thank you for joining us. Donovan Wignal is also coming back this morning. He was on with us recently, and he's back today. He's a former president of the Micro, Small, and Medium Enterprises MSME Alliance. Donovan, great having you again. How are you doing this morning?
Yeah, I'm doing great. I'm Richie B on my way to work.
Okay.
Good morning, David, and good morning to your listeners.
Morning.
All right. David, let me start with you. What would you say are the implications, really, for us, even the common man, when we hear about the rating from Standard & Poor's being moved from BB minus up to BB? What should we understand by that?
All right. It is a very positive move for the country in terms of its finances. The rating means that it is getting closer to what's called investment grade, which are the best of the best ratings. We're not there yet, but we're moving up. But it is very positive in that the debt that's already been issued by the government over the last several years, it is now been bid up in price by people, investors trying to buy some of this debt. And that means that the interest rate has gone down on those bonds. But the important thing is, for future issues of debt that the government may undertake,
yes,
assuming this rating holds, which I don't see any reason why it won't hold, they'll be able to issue debt when necessary at a lower interest rate than they used to before this rating was increased. That is the big import of the ratings upgrade. And I should add that it is underpinned a lot by the financial performance of the country. And I'm seeing a section, this is what grabbed me most of all in this report. Jamaica is the only one of 141 countries rated by S&P that has achieved a primary fiscal surplus above 3% of GDP for the past 10 years. So it is the only country that's managed to do this of all the countries that are rated by S&P. So that's the simple, summary of what happened.
Thank you for that, David. And that definitely indicates sort of a positive outlook. But I have to ask you, Donovan, how difficult might it be for the country to maintain this fiscal discipline and ensure continued economic growth and even debt reduction going forward?
Yeah, well, Richard B, it's not going to be difficult. The infrastructure is there. We have the fiscal rules, and if we continue to observe those fiscal rules, which have been in place for the past almost a decade, where those rules govern how the country spends its money, how the country borrows, how the country repays debts, whether it's international debt or local debt. If we continue to manage the country's fiscal responsibility, if we continue to be fiscally responsible, we'll be good. And I think the template is already there. Just a matter of continuing to do what we have been doing to be at this particular position. So the work has been done. Just a matter of them keep on doing what they're doing.
So, David, it is obvious that debt management is a key element in this process. Are there specific strategies that you believe Jamaica ought to implement to further reduce its debt to GDP ratio?
Well, as Donovan says, the strategy is in place and the infrastructure is in place already. But there are some more things they could do. I think the Prime Minister is speaking about a major initiative for productivity. And what that could do, especially in the government sector, if they're able to implement serious productivity increases, that would mean it would cost less to run government, which again would contribute to further surpluses and debt reduction. So there are more things they can do. The low fruit has been picked, the low-hanging fruit.
Mm-hmm.
The next level is going to be a little more difficult. But I quickly want to come back to what you mentioned, Richard D., which is how does the common man deal and interact with all this?
Yes.
The simple matter is that the lower the country's debt burden is the more revenue available to go into health, education, security. And you see things like the investment in the police force that reduce the murder rate. You're seeing things like the school bus for the rural areas. So this financial performance by the government has directly allowed them to do these things, and building highways too. Some of them are financed locally. So that's how the layman can connect to this S&P report.
Yeah, that's very helpful information. Donovan, what are the sectors that you think are likely to benefit most based on this positive economic outlook?
That's a good question. I think the overperforming sectors are already doing what they're doing, tourism being one of them. I think we need to pay more attention to local manufacturing. With the current geopolitical situations, imports are going to get more and more expensive. So while we try to seek alternative markets from those markets which are expensive, it's important for us to build local capacity. So it's important for us to get efficient in our manufacturing current, and also to put in additional manufacturing capacity and to address the problem of productivity in Jamaica. So anything that we are currently importing that we could end up manufacturing in Jamaica, those are areas that we should pay attention to. And when I say anything, I mean anything.
Okay.
I think the cost of energy is something that we need to look at. If we can if we can invest some money, some of that cash that now has been freed up, that becomes available because of the targets, because where the targets are, we can reduce the cost of production, and that, I think, can, in and of itself, boost productivity significantly.
Mm-hmm. All right. David, are there any risks or challenges that you see that could impact negatively, and how can these be mitigated by those in charge of our economy?
All right. There's, of course, a natural disaster that can occur. I mean, burial was fairly mild in the scheme of things when you think about Gilbert and Andrew. But natural disasters can be a risk, although the government has put in place a catastrophe bond, which kicks in if the disaster reaches a certain level that you can collect and pay your way out of what you need to repair and so on. The other risk would be should another government come in place that tries to do a lot of expenditure that is not truly financeable within the budget and has to go borrow money to finance this, then that could be an issue. But aside from those two, the natural disasters and a change in policy, I don't see a lot of things that could derail this. I think it's now a virtuous circle, because the more you manage things properly, the more you get ratings increases, and the less your financial burden becomes because you're paying less interest on your debt, etc. So it becomes a virtuous circle. I don't see much chances of it being derailed.
Okay. And considering the fact that we just recently had a general election, then at least we have maybe up to 4 or 5 years before the policies might change dramatically from one government to the next. I don't know if there's any way that Donovan can increase the volume on his phone somewhat, but I want to ask you, Donovan, as we look at what's happening globally, how might global market trends and economic conditions impact Jamaica's economy following this upgrade from Standard & Poor?
So inflation is a challenge for us, and we've been trying to, and have been fairly successful in managing our inflation. Imported inflation from geopolitical upheaval is always a risk. The cost of fuel, the cost of our imports, tariffs being applied to our exports in those markets can significantly impact our economy. So building resilience in our economy is absolutely important. So our food security, maintaining our exchange rate. The OJ has also been doing a fairly good job at that. Looking at how we toggle the switches to manage our rate of exchange, our interest rates, that is also important. But it's really tantamount to us paying attention to what is happening internationally and making sure that we are preemptive in our actions and not do the wait and see thing where things happen and we react to what happened internationally, but literally prepare for everything. Just like how we prepare for a natural disaster, we should also have strictures and structures in place to prepare for any economic shocks that might be translated from anything that happened internationally. Mm-hmm. But we are, I think, at the cusp of a situation where we can, if we manage it properly, build significant resilience in our economy by boosting productivity, boosting production, manufacturing in Jamaica. And if we get that right, we'll be walking on water, I think.
Mm-hmm. All right. We hope we get to that stage. David, can you recall what the best rating that the country has experienced was back in the day? And what do you believe the government ought to be doing now? Thinking of resting on their laurels at the BB rating or trying to even still further improve that rating?
Okay. We were having our debt rated by the S&P and the Moody's and so on, because a lot of our debt in those days was mostly multilateral, and I don't think there was a rating attached back in the old days.
Okay.
As to what the government should do, no, don't rest on your laurels. Keep going at this until you get to your desired target. But there is much more to be done. Like I said, the productivity issue hangs over us. It is something that we need to attack, because we need to become more efficient. We're not just competing locally. We're competing with everybody else in the world. And they have low-cost energy. They have modern machinery. So we need to get our productivity up closer to where those are.
Absolutely.
You wanted to add to that point, Donovan?
Yeah, definitely. I think we can't overstate, Richard, that getting production going is the most important thing going forward. And I think the Prime Minister, in several of his speeches would have attested to this, not just productivity, but efficiency in the public service. I see where they have a new acronym, SPEED, where it basically involves the re-engineering of our public sector in terms of how it interacts with the public, and making processes and applications for permits, everything that we need to do with the public sector, being more efficient. I heard Minister Albin Hill, who has been a champion for an efficient public service, really digging into it. And there are several committees on which, I sit where they're actually working assiduously to get the public sector more efficient. Once we have an efficient public sector, once we have a very efficient way of, producing goods and giving services, I think we'll be going on the right path, and we continue. The whole thing of fiscal responsibility started with EPOC. It's a good model, and I think we should have the same model for example, the public service, how we measure productivity, how we tweak it, how we get to the point where, it's so efficient that, we have no issues moving the country at speed to where we want it to go.
Okay. Listeners, I know these are the kinds of conversations that you listen to us for. I couldn't do it alone. I want to thank David Wan, financial expert, and Donovan Wignal, former president of the MSME Alliance, for your participation in this conversation this morning. Gentlemen, have a great day and have a wonderful weekend. Thank you very much.